Hello everyone out there, how are you all doing? I'm Kate Hill, bringing you the best and unbiased and honest content on property, along with fantastic hints and tips. Stay tuned today for all your latest property news. The Australian property market is all abuzz, with expectations of further price booms in hundreds of locations. According to data from PropTrack, property prices have already seen a 4.3% increase this year, with certain suburbs experiencing even more substantial growth. Now, remarkably, nearly 500 suburbs have witnessed double-digit price growth in the current year. PropTrack attributes this surge in prices to a combination of factors. They point to a subdued listings environment and robust demand, driven in large by high levels of migration as key drivers behind the price spikes. One interesting trend is the rising demand for affordable areas. As prices increase in traditionally budget-friendly neighbourhoods, they become obviously highly sought after, further boosting prices. This is exemplified by the fact that most of the top 10 suburbs for price growth in both unit and house categories have a median value of less than $500,000. As interest rates have risen, people's borrowing capacity has diminished, leading to tighter budgets for potential buyers. As a result, regions that remain comparatively affordable are in high demand. These trends suggest that the Australian property market continues to evolve and offer opportunities for both home buyers and investors, with particular attention on the suburbs, obviously poised for future growth. More confidence has made its way back into the Australian housing market, as indicated by the latest NAB Residential Property Survey. The survey reveals that expectations for a housing market recovery over the next few years have strengthened significantly. Confidence levels among surveyed property professionals have reached their highest point in 2 years. However, not everything is smooth sailing. A number of individuals in the construction industry have expressed their concerns about the high cost of building, which continues to hamper their ability to initiate new residential developments. NAB economists have reacted to the changing landscape. They have revised their expectations for property price growth upwards, factoring in stronger than expected outcomes over the past 3 months. Their prediction indicates that the capital city dwelling values are poised to rise by approximately 8% by the end of the year. Looking ahead, NAB anticipates further price increases with 5% rise in 2024. Now, this optimism is fueled by the ongoing strength in housing demand, which continues to outpace supply, mitigating the impact of rising interest rates. This resurgence of confidence in the housing market reflects a positive shift that is being observed with potential for continued growth in the near future. The number of new listings hitting the market has slowed again, despite increased buyer demand and rising prices. Analysis by Domain says that as a result, many locations are experiencing strong price growth. It says for the month of September, the number of new listings across combined capital cities was down 12.3%, and it's down 0.7% on the same time last year. The Ray White chief economists say that while there was a slight increase in listings from June to August, new listings have slowed since then. It's a bit problematic, of course, because there are a lot more buyers out there. But at the same time, we generally would expect more sellers this time around. But we're just not seeing that continuing to occur as we move into late spring. They believe that the low listings will continue through to the end of the year. Now, realistically, if someone wants to sell before Christmas, they are going to need to do that within the next 2 weeks. Properties are selling at a faster rate than they were 12 months ago. So CoreLogic's latest days on market figures show in September that the average days on market nationally was 30 days, compared with 36 days in January 23. CoreLogic say that the market is in recovery mode and a sense of urgency has returned. They expect market conditions to remain fairly stable until the end of the year at the least. Some capital cities have even shorter days on market, with Perth the lowest at 13 days, coming down from 19 days in January. In Brisbane, it takes on average 22 days to sell. In Melbourne, 28 days. In Sydney, 29 days. Properties in Adelaide are selling within 30 days on market, having been at 37 days at the beginning of the year. Now, as always, I'm going to keep you posted on all things property from around Australia as our year comes to a close. Don't forget to hit the subscribe and like button if you are enjoying all the free content, and I will see you all soon. Bye.